This morning I want to talk to you about TPD cover. So TPD cover is a lump sum if you are deemed totally and permanently disabled. There can be different definitions. So there can be an own occupation definition, which means you only need to be considered unable to do your own occupation that you were doing immediately before the claim. Then there's an any occupation definition, which is maybe the one that people are more used to, which is the one that more aligns with the super rules of release. So it means you need to be deemed by two medical professionals that you're unable to do any occupation that you'd be reasonably qualified to do. So for example, I once had a client who had a serious accident and became a quadriplegic. So he met that TPD definition. He was deemed by two doctors that he could never return to work in anything he'd be reasonably qualified to do. That TPD payment enabled him to buy machinery to have at home so that his family could care for him, as well as the ongoing yearly cost of associated with being unwell. So nothing to do with protecting his income. TPD, we more look to fund medical expenses and helping you, I guess, financially survive and meet those costs of being permanently disabled. So TPD traditionally is a lump sum. So as soon as you get that medical diagnosis by two medical professionals, you are given your lump sum payment. Now, however you want to use your money, that is up to you. It is your TPD lump sum. But that money can be invested conservatively, earn a rate of return and be able to help you cover your costs. Now, if by some miraculous luck of fate, if you happen to return to work and recover, 5 or so years later, that's okay. You're not made to pay back the money. Now, the impact that people claiming on TPD and returning to work is probably a different conversation, but I wanted to highlight, I'm reviewing cover with ART, so ART Superfund at the moment for a client, and I wanted to highlight a key difference with their TPD payments. So if you have an ART Superfund and it classifies your TPD as TPD Assist, the payout mechanics are very different to a traditional TPD. So like I said before, traditional TPD, any occupation, initial medical diagnosis, two medical professionals signing you off as unable to return to work. Here is your TPD payment of, let's say, $600,000. Go and use it however you want, invest that money, have it cover your medical needs. With TPD Assist, it can be paid out over 5 or 6 installments. And so basically you get an initial installment. So you're deemed by those medical professionals again. The first installment you receive might be around, 1/5 of the total sum insured. So let's call it $150,000. So you're only given $150,000 of your total $600,000 TPD payout. In 12 months, you then have to reconfirm that you are still permanently disabled. And so then you'll get released a second tranche of your total TPD amount and benefit. Then in another 12 months, so 2 years down the line, you have to prove again that you are still totally and permanently disabled. So I'm highlighting this difference because a lot of the times we think that just because something is called TPD, that it operates the same. But if you do have an ART policy, double check your annual statement or your insurance section and see whether it says TPD Assist, because it does operate differently than a traditional TPD lump sum payout. So it's just good to be aware of these nuances. And if you do want to take a bit of a deep dive and understand your TPD cover, make sure that it's right for you, because there's not necessarily a right or a wrong way. It's just about being aware. Reach out to your financial advisor or shoot me an email or get in contact. Happy to help.